Welcome to the blog for Thursday the 9th of August. This is day 44 of the 65 of the compound effect, making forward progress every day, applying my edge and method. So the goal of the compound effect is to stick really tight to the method approach, or create a very systematic approach to the market where it's all about the model, and I'm just acting there as a third party, basically placing the trades. So of course I'm there to improve or always look at ways to make the model better. But at the end of the day, I just want to see it as, I'm there just waiting for the model to present to me a setup, and then from there, taking the trades. And then as for the actual trades, or even with these three strategies here, some of them involve some discretion, but that discretion is very much systemized. As far as because basically these areas involve pivots or changing pressure in the market or support of other markets, and also key levels. So obviously strategy 1, key levels, I like to just try and stick with some key levels established at the beginning of the week. Don't like to add too many levels during the week. If something becomes quite obvious, then I will add that in, like I added in a level today, but try and keeping the key fairly key. So I've just got anywhere from 2 to 4 levels that I'm looking at within a day, and that's what I want to base that continuation or the momentum or the continuation trades on. Strategy 2 is breaking the highs and lows, so that involves again with the directional trade, first directional trade of the day, which I tried to get on, and then the breakout trades that involves other markets, but again it's very systemized as to how I involve other markets and what I interpret as support from the other markets. And then strategy 3 is based on new directional pivots within the markets. Righto, so it's today's action. So here's the daily chart. I mean, most of the time I'm bringing this daily chart up on the blog just so I've got record of it, and if I ever need to refer back to it, I can. I've got some overall trend lines and support and resistance areas and things like that, but I don't tend to take too much from the daily chart. I mean, sometimes we're in some very significant areas. Yes, you can pay attention to that, but for example, this area here, it's obvious we're up rounding the highs. As far as what it's doing on a more of a closer term basis, it's really hard to gauge from that, and it's just kind of all merging into sort of a little blob there. So, like I quite often say, bring over the 15-minute chart, and this is what I place my longer term emphasis on. There's a few things I was looking at today. I was quite amazed at how this market just keeps on respecting this trend line here, and it's reacted to the downside and the above side of it quite a few times. So the market, once we start opening this market, we've got to bounce off this 96. So I think 96 is probably the most significant level in the market at the moment as well. Once we got to bounce off that and head it up, it became quite obvious these markets were having a go on the upside again, getting some pressure up. Then all of a sudden it completely changed. The pressure just came charging down, and I took a sell trade that failed, but expected the sell side to continue after seeing such a change in momentum and all other markets coming down and breaking their lows. And from there, that change will back to the upside. Once we got back to the upside, really looking at a certain level in the market to hold, I'll take through that as well. And once that held, expected these markets really to push higher, because what we did, we tried to go up, came down, then that downside, which was so strong, has been disregarded. We're bouncing off support, so from there, thinking that there's some pressure on the upside, going to these highs, or even these highs, or even going up and having a look at, testing this trend line again, and based a buy trade around that as well, which ended up with some profit, but didn't go the way, the full way that I expected. And from there, now we're pushing back down, and we're getting back underneath this key 96 level. I think the market's going to try and use it as resistance and see if it can push down lower. But anyway, we'll have a look at that once the Friday market opens up, or the cash market opens up, see where we are then. Righto, so I haven't drawn in the order block, one sec. Alrighty, so I've got the order block or the breakout block here. Looking for the market to push outside of it, whether it's the upside or the downside with some aggression. All their markets going that way as well, and then using it as support. Sometimes it will come back quite quickly, and as soon as it breaks 3 or 4 ticks out, using it straight away, getting on it then. Or other times, like this one here, it's gone away a few points, then comes back and using it as support then. Just waiting, but not, of course, leaving it too long. If the market comes down, then goes up, and then breaks down again, taking the order off because it's getting some momentum in the opposite direction. But interesting thing about this particular one, haven't had a setup on the downside for a long time. Obviously, we're in an up market at the time, and as far as these markets pushing down and getting through what is a pre-market range, it just hasn't happened for well over a week, probably even 2 weeks now. So it's just the situation we are as far as the pressure and momentum very much on the upside in the overall markets. So with this one here, it's hard to tell, but on the 1 minute chart shows it a bit better. There was no entry here, but it actually, where's the line here? It broke through here, actually came back and flashed on the order again, and then went. So it was actually 2 times looking for an entry. This one here, it went just 4 ticks really quickly, bounced back immediately off that support there, and then it came back a second time and missed it by a tick. So unfortunately, no entry there. It's happened quite a few times with this particular trade. On my spreadsheets, we talk about recording as much information as possible to create risk models and help you with expectancy and find the best way and to take profit and exits and things like that. It also applies for entries, and I'm recording that every time the market either flashes on an entry or comes within 1 tick of where I've got an order, I'm recording that, because if it starts to happen too often, then obviously I've got to change away and missing out on too many winning trades. And by sitting here on a limit order, I've said this a few times, but you're going to miss a lot of winners, which I have recently around this area, just by just getting close to the order and taking off. But of course, the flip side of that is, if it's going to be a stop out, it's got to go through, fill you in, and then obviously go to your stops. You're not ever going to miss the stop outs, but you're going to miss a lot of winners. So over the longer term, it's something to be very careful of, and something I'm certainly recording and might have to look a bit closer into at the moment. And I know a lot of my setups, because I'm using key levels of the market, I'm looking for the market to respect key levels. Then once it does that, I'm placing limit orders. So a lot of the time I'm relying on the market to come back and fill a limit order. And I find of recent times there's been quite a few ones that just either flashed or come within a tick and gone without me. So I might have to look at getting a little bit more aggressive with that, and keeping, maybe, for example, keeping this order on there, but having some sort of stop order, as in a power fade order, where you put the more order above the market and looking for it to push through that direction. I'm not sure. There's a couple of ways to look at it. It's certainly not something I've got to keep an eye on. So from there, it's just missed that entry there. It's pushed up higher. From this region here, we started the pullback. Looking at the other markets, and when I showed you on the 50-minute charts before, believed that the market had some opportunity to keep on pushing higher. So by this stage here, obviously it became quite evident that the market was going to keep on heading to the downside, and actually look for it to pop back and take a 5-minute momentum or 5-minute fade. So use that as resistance and then push lower once this moving average is pointing down. But as it was coming back while the moving average is pointing up, was also looking for a continuation trade or a buy. So come down sort of anywhere around this region, but like bounce off it and then place the order on it, look for it to come back, use the support, and then away again. But it's a key level in the market, just depending on momentum, and depending on the direction of the moving average. Was looking at it as a buy area. We then pushed through it, and once we pushed through it with some power, looking at it as a sell area. But neither of them came close at all. So it's just the arrows there just to show the general area, but no setup there. From there, we've pushed down and really started to get this momentum on the downside. As I talked about in the 50-minute chart before, all the other markets were just flying on the downside. So I believe that these markets now were changing getting a change of momentum, and should really start to hold, and maybe even hold through the lunch period and into the afternoon. So did look at where is it? So I took taking a step back. We had an actual 5-minute fade trade here, so I don't take the physical fade, but I'm looking at roughly the same setup based on my key levels. So, this wasn't a key level for me. If it started getting underneath this level, then I would have looked at something different. But right here where it was, you can see it's bounced off that area perfectly and headed to the upside. So when there's looking to take a sell there just above a key support level in the market for me, I'm not looking at that sort of thing there. But when it starts pushing up and failing like this, this is a reversal strategy. So when it places some pressure on this point here, so I call this a pivot. So this is the area where the market's held, tried to push lower from, and that's where the sellers should continue on and head lower if they're in control of the market. If the market comes back, puts pressure on that pivot, I'm looking to buy the opposite direction, or take the opposite direction, which in this case is a buy once it breaks, and get a continuation through there, because obviously that sell side's failing. Now, a big major part of it is that, and I've had quite a few of these setups for recent time, but you need other markets supporting. So as this market's approaching here and looking to break, I need at least one of the other markets already pushing through that area there, and that's what I classify or got written down for myself as market support, and then I'll other market support, then I'll take on board the trade. But this particular area here, none of the other markets, I mean, they were hanging around in the region, but the ES was leading them through on the upside here. So even though the areas worked well, there wasn't actually a setup for me. So that's why I've marked that area there. Also, it's also coming out to an area. This might have been an influence on me, but I believed. I mean, I was looking at a sell trade up a bit high and using this as a resistance area. But of course, I can't let that play a part of this other trade because this trade's based on pivots and not key levels. So I was looking at that first. I mean, the other markets weren't pushing up, so it gave me even more reason to maybe look at the sell side here. So I looked at getting the order on basically somewhere between this low point here and the key levels. So I think I took it at 98.50, what was the sell, and look for resistance to hold and get a continuation in this downside here. So obviously it hasn't worked. It barely even got a tick in my favour and went through and got a full stop out in that particular case. So couldn't even get any out for a small profit. From there we pushed up higher. Now we're getting above this level here, so it's a bit like a change. It's a changing of the tides again with these markets. Rather than this area acting as resistance, it's got above it. So now the obvious thing is that becomes a bit of a support level. You can see it's bounced off it really quite nicely. But even before this region here, as this market's coming back down in this area here, you can see the moving average is still pointing down. So I'm actually just waiting this particular area here. It became a real, we talked about in the trading room, a real 50-50 areas where it's going to bounce and go higher, or whether I actually want to get underneath it and use it again as resistance and push lower. So at this stage here, if it had actually started pushing through with some sort of aggression again, would have been looking at some sort of my continuation trade, or which is the equivalent of a 5-minute sell. But that wasn't the fact. It held. Wasn't looking at buying straight away as soon as it touched, just because of the reason that it was an area where it could really pop either way. Waited till the market showed it wanted to hold that level, and then took the trade as a 5-minute fade or 5-minute momentum trade. In the end, the market's gone about 8 ticks in my favour. This particular one, I had some profit targets set at all sorts of different levels. One at the high of the market, and some others right up here. Just thought the markets were really going to take off the upside after really getting rid of some of these sellers and strong sellers that ran before, indicating that the buyers had some power, but not the case. So I had high hopes for the area, but as always, the market's the boss. You can't. It's not like I'm trying to predict the area, just taking advantage of what could potentially come my way. And in the end, it worked out to get about nearly 3 ticks profit just because of pulling out some of my contracts at 1R. And so some contracts at 1R, 5 ticks, and then of course the rest of them were out at +1 after being a break-even trade. And then it just basically sideways movement after. Expecting it to maybe hold and go higher. It really just didn't do anything, really just held and went sideways. Just before I finish up, in regards to this trade here, what I do place a lot of emphasis on is the moving average and the direction of it. And like a 5-minute fade, we want the moving average pointing down, but taking it while it's still, there's pressure and momentum, and that is indicated by this moving average not being basically below this blue one here. So taking it basically earlier on. So around here is the right time. For me it's not the right area, but it's certainly the right time. You can see the moving average pointing down. It's still above that blue line, indicating this is a newer trend that's got momentum and power. By the time I was looking at taking it, it was actually back in. You can see by now the moving average is pointing down. So what I normally do in these kind of situations is actually hang off the area and wait for a confirmation entry, basically where I look to see the market react off the level, push off it, and then come back and use it again as resistance, and then take it. So I'll still record it as it is. It's a loss. It could have quite easily just went straight down in the area, but just pointing out that by the time, the thing about this trade is I think it was the right area, maybe not the right timing, and leaving the opportunity to take the trade a bit too late. It should have really popped up. If it had popped up here, a lot better place to take it. While this moving average is still a bit higher, or pointing down but higher. By the time I'm taking it, it's getting very extended, and when you're in an extended area like that, then it gets more likely to get a pop or to push through. And that's where it's in my trading plan to use a confirmation entry, which if I had done that would have avoided the trade. But that's reflecting back on the area. But so be it. I'll still put it down as a loss in my system records. So overall, what was today? I'll call it a break-even trade, but somewhere between a break-even and a winner and a losing trade. The interesting thing about this week, you can see they've had one winner, so it's been a slim week as far as winners. I mean, overall too, there's been less trades, but one winner, two break-even trades that involved a directional on the downside, which had a high hopes for, and then this trade today, which had very high hopes for. Two trades really had the potential to load up on, ended up being break even, and then three just about full stop outs, 2 5-tick losses and a 4-tick loss. But with the pulling the contracts out at 1R and things like that, overall, again, keeping an eye on what's best for me. But based on this week, even though this winner here was a 9.7 tick winner, but these two break evens ended up being 2.3 tick winners. So the reason for the decimal place is because I've got multiple contracts. I'm averaging it out, what I'm basically making in ticks per contract. So what normally would have been break even trades, I'm actually pulling out nearly 2.5 ticks from. So that's really helping the profitability side. So overall, before commissions, there's 14 ticks of losses and 14.3 ticks of winners. So it just goes to show what using expectancy models and R multiples and having a look at what works best in that regards. There's some real opportunities that even it's shining through again, even in a week like this where there's been one winner out of 6 trades, still up as far as ticks are concerned, or basically break even really. Anyway, that's a wrap up for Thursday, and we're back on Friday.